Someone is sitting in the shade today because someone planted a tree a long time ago. This powerful phrase encapsulates the core principle of long-term investing and the magic of compound interest championed by Warren Buffett. Imagine a tiny mustard seed planted in the soil. With patience and care, it grows into a robust tree, providing shade and bearing fruit. In the same way, compound interest works silently over time, transforming small investments into significant wealth. But what exactly is compound interest, and why is Warren, one of the most successful investors in the world, such a staunch advocate of this strategy? To understand, we need to think of compound interest as the eighth wonder of the financial world. Not only did he grasp this concept early on, but he also applied it masterfully, making it one of the pillars of his financial success. Compound interest is simple in theory, but transformative in practice. It involves reinvesting profits so that future gains are generated by both the initial capital and the accumulated earnings. It's money working for you, multiplying itself like a snowball effect. In this video, we'll explore how you can use compound interest to build sustainable wealth. We'll discuss what Warren learned throughout his journey, how he applied this strategy in his life, and how you too can harness the power of compound interest to achieve financial freedom. We'll dive into the philosophy that made him one of the richest men in the world, and that could transform the way you think about money and investments. But before we proceed, an essential question. Are you willing to plant a seed today and care for it patiently until it grows? The answer to this question could be the key to your financial independence. Warren is a living example of how compound interest can turn small investments into astonishing wealth over time. From a very young age, he understood that time is the greatest ally of a patient investor. He often mentions that he started his journey at the age of 11, and that, if he had started earlier, he could have accumulated even more. To understand Buffett's philosophy, let's simplify. Imagine you invest $1,000 at an annual return rate of 10%. After the first year, you'll have $1,100. In the second year, it's not just the initial $1,000 that grows, but also the $100 of accumulated profit. By the end of the second year, you'll have $1,210. This process continues, creating a cycle of exponential growth. Warren learned that in the long term, compound interest is like an avalanche. It starts small, but as it gains momentum, becomes a powerful and unstoppable force. This is especially true when you adopt the mindset of consistently reinvesting your profits and resisting the temptation to spend them. He didn't become wealthy just by picking stocks. He became wealthy by holding onto his stocks and allowing compound interest to do its work. He is famous for his buy and hold philosophy, selecting companies with long-term growth potential and letting his capital multiply over time. For example, one of Buffett's greatest moves was investing in Coca-Cola in the 1980s. At the time, he purchased shares of the company for around $1 billion. He held on to those shares for decades, and today they're worth over $20 billion, not to mention the additional billions earned in dividends. This is the power of compound interest combined with patience and strategic vision. You might wonder, why don't most people take advantage of compound interest? Although the concept of compound interest is simple, its application requires patience, discipline, and a long-term perspective, traits that are rare in today's world, where everyone seeks quick results. Many people underestimate the impact of time and lack the patience needed to let their investments grow. Warren often warns about the dangers of quitting too soon and emphasizes that the market rewards the patient. Additionally, he highlights the importance of starting early. The earlier you start, the more time your money has to grow. Even small amounts, when invested over long periods, can yield impressive results. One of his greatest lessons is that compound interest works best when combined with an investment strategy focused on value, patience, and a deep understanding of the business. Warren believes that investing in a company is like becoming its partner. He looks for companies with the following attributes: a simple and understandable business model. He avoids complicated businesses or those outside his circle of competence. He prioritizes companies he understands, such as banks, insurance, food, and beverages. A classic example is his investment in See's Candies, a candy company with a simple yet highly profitable business model. Durable, competitive advantages. What he calls an economic moat. This includes strong brands, patents, low costs, or any characteristic that makes the company difficult to replicate. Coca-Cola, for instance, is a global brand symbol with wide distribution and consumer loyalty. Efficient and trustworthy management. Buffett invests in companies led by managers who think like owners. He seeks leaders who are good capital allocators and focused on long-term growth. A fair price. He always emphasizes that even an excellent company can be a bad investment if the price is too high. He follows the principle: it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. When we think about patience, we realize it is a secret that few practice. Buffett often says, the stock market is a device for transferring money from the impatient to the patient. Many investors are swayed by market volatility, buying and selling at the wrong times. He does the opposite. He buys companies he believes are undervalued and simply holds on to them, ignoring short-term fluctuations. For example, during the 2008 financial crisis, Warren invested billions in banks and solid companies, taking advantage of low prices. While others panicked, he remained calm, knowing that the underlying value of these businesses had not changed. Today, those investments have proven to be highly profitable. The role of time and discipline is a crucial aspect of his journey. He emphasizes that compound interest relies on two things: consistent returns and time. Consistency is achieved by choosing good assets, while time requires patience and emotional control. He calls this testing your resistance to boredom. Investing may seem uneventful, but it is precisely this steadiness that creates wealth. Warren doesn't rely on complex or risky strategies. He invests based on solid principles, many of which anyone can apply. By following these principles, you can transform your approach to money and begin building wealth sustainably. The important thing is not to stop questioning. Curiosity has its own reason for existing. Albert Einstein. This quote, often mentioned by him, reflects the essence of his approach to continuous learning and patience. And just like compound interest, learning is cumulative. Small daily lessons lead to transformative wisdom over time. Imagine your life 10, 20, or 30 years from now. What would it feel like to live with financial peace of mind, knowing that you planted seeds that flourished over time? This is possible, as long as you decide to act today. Buffett wasn't born rich. He made smart choices and remained disciplined. You can do the same. The power of compound interest doesn't discriminate. It's available to anyone willing to start and be patient. Now it's your turn. Plant your seed and watch the magic happen. Don't forget to subscribe to the channel and like the video. If you want to keep learning smart investment strategies inspired by Warren Buffett's principles, this is the right place for you. Subscribe now so you don't miss any content that can transform your relationship with money. Like the video to help us share these valuable tips with more people like you. Leave a comment to share your thoughts and let us know what topics you'd like to see here. Your feedback is super important. Let's grow together on the path to financial success.